is we always bring in featured guests to come on Closing Bell, people that we feel that will give you the best education on trading the markets, and we always bring some featured guests. Sometimes we bring featured guests more than once because we feel they got better content and got better knowledge, and we feel that you should be listening in, and sometimes, these are great opportunities because to see the same guest over and over again, which is why I preferably like to have Andrew Keene back here at Cybertrade University because of he trades very, very similar like me, and I like to talk a little bit about him and don't want to take too much time away from him. But for some of you who don't know who Andrew is, Andrew Keene has been a floor trader on the down in the Chicago Board of Options Exchange, and obviously, not only been a great trader but also a great contributor to the education community. He's got some great content and has a passion to teach because we all know, being on the floor and myself being a market maker, we hate to see people losing money, and there are tens of millions of people that are trading every day, and the cheapest trade you can make is just understanding how to play the game, because that's what we're looking to do. Now, Andrew, once again, I've met him several times. Last time I think we met up in the Las Vegas Expo. I know some of you guys we've also met over there. Also, great opportunities whenever you get a chance. I'm actually going to be in Orlando doing a speaking myself. I know Andrew's probably going to be there also. But great opportunities for you guys to also, whenever these events come around, to see great speakers. And just feel free to ask us. You'll see us there. Hey, Fausto, I'd like to see you again, but anyone else? And that's why if you can't see us there, that's why we have Closing Bell. So don't want to take too much time from Andrew Keene. Andrew Keene, once again, a great floor trader, great options trader. He does talk a little fast. Sometimes I think he's from New York, even though he's from Chicago. But please, everybody, don't discriminate us. We're just excited to share the knowledge that's there. And the faster these stocks move, I think that's why we talk very fast. But it's always been fun doing it. So don't want to take too much time away from Andrew. I don't want to, but for everybody, feel free to answer questions, and I'll answer it. We'll probably be on for about an hour. And this is being recorded. You'll be able to access it on your dashboard and on YouTube, our YouTube channel on cybertradeuniversity.com. So everyone, welcome aboard. Enjoy the presentation. Andrew, the stage is all yours.
Hey, what's going on, guys? How's everybody doing today? As Fausto talked about earlier, today was a crazy volatile day in the stock market. I watch S&P trade a lot. It trades for 23.25 hours in a day, and last night we really weren't moving at all. I woke up at about 5 a.m. Pacific time, which would be 8 o'clock Eastern, and the futures were up 7 points. Then I woke up again at about 6 o'clock Pacific, which would be 9 Eastern, and the futures are up 15 points. Futures then opened and rallied 26 points. And then we reversed, and we are down 19 points. So it's pretty rare that you see that big of a volatile day. It seems like a lot of the intraday action is in the U.S. stock market. We used to have these times where, the market would open in the Globex session, and there'd be a lot of volatility in the Globex session depending on, Chinese GDP numbers or Chinese growth numbers or exports or even recession numbers out of Germany or Europe. But now we're actually seeing a lot of swings intraday in the market. It's like the algos have taken over. And, one thing I always get asked about, and, what I try to do, I'm an educator. I teach just like Fausto. I've met Fausto a bunch of times, like I said. The last time we were in Vegas, Fausto was nice enough to buy me some drinks, and he gave me his leftovers at dinner. I came a little late. So I've met Fausto a bunch of times. We've done a panel together at the Money Show, spoken a bunch of times together, and we have a very similar trading, philosophy, which is, this is a trade, okay? This is a risk versus reward setup. It's not a let's get married to a position buy and hold setup, okay? When I'm trading, I just want to put on the trade, and, with probability and math in my favor, hopefully I make a profitable trade and then move on to the next one. And what everybody always asks us over and over and over again is these 4 stocks, okay? I always try to teach and educate what people want, and what people want is, when can I buy Apple? When can I buy Facebook? When can I buy Google? Google hitting 52-week lows. Amazon's, okay? I do something called lightning round at the end of all my presentations, and everybody always asks the same stocks, okay? Yeah, I'll make it a random Gilead or something like that, VMW, but in general, everybody's always like Apple, Apple, Apple. I said to myself, I should do a course on teaching how to swing trade Apple, and I can throw in a couple more components. So we've looked at the historical results. My SEC lawyer will never allow me to say the word backtesting. So we've looked at the historical results of these 4 stocks, and we're going to show you an example of one of them today is in Netflix. And how I can look at this, everybody knows I'm a big proponent of the Ichimoku Cloud, otherwise known as Ichimoku Kinkenhoi. There's only 3 books written in English on it. I wrote an ebook on it. We have 2 courses on it. It's my favorite study in the world. That's how I use all my technical analysis. So today I'm going to teach you guys how you can use Ichimoku Cloud starting on the monthly chart, going to the weekly chart, and then going to the daily chart to trade Apple, Amazon, Facebook, and Google more profitably, but trade it as a swing trade. If you trade futures or forex, today's probably not the best webinar for you. Okay? If you like to trade these 4 names and a lot of names to this degree, which are these high beta names, high volatile names, where they can gap higher, can move a lot in a day, this is a great presentation for you guys. It will be recorded. If you guys have any questions throughout the presentation, feel free to ask any questions. I'm very good at multitasking, so just feel free to ask. Little risk disclaimer here. We have to put this in every single webinar we do. Day trading, short-term trading, option trading, and future tradings are extremely risky. The difference between a good trader and a great trader. Good traders think about how much money they can make. I am not a good trader. I like to consider myself a great trader. I always say, if I am wrong, how much money can I lose? You can look at how much money you can lose as 2 components. You can look at it as a percentage of your total book, or you can look at it as a dollar amount. Okay? Dollar amount, how much am I willing to lose, or percentage of book, how much am I willing to lose. Never execute a trade unless you can afford and prepare to lose your entire investment. Simple and easy. No trades are recommendations or advice. We cannot be sued for losses of capital. All trades are for educational purposes only. I am not a registered investment advisor. I do not have a 7, a 63, or a 56. Everything I trade is 100% my own money. I do not have any customer or client capital. Okay, so when I'm trading on my own account, and everybody watching today's presentation adheres to all risk disclaimers on www.optionhacker.com and www.keenonthemarket.com. Now we've got through all the fun, good stuff. Let's get into the nitty-gritty. So my name is Andrew Keene. I'm sure you guys have seen me. I was a market maker at the Chicago Board of Options Exchange for a decade. From 2006 to 2009, I was the largest independent Apple trader in the world. That's when market making was a good business to be in, because we could have 2 sides of the market. And a market maker is just kind of like a currency exchange. And what happens to the market making business is that they made weekly options and they made penny-wide markets. And what do I mean by a penny-wide market? It means that a market used to be $1 to $1.20. The best option educator in my genre is Lawrence McMillan. I told him that when I saw him in Las Vegas. And, he used to do workshops and he'd do DVDs and say the market was 5 bid at 570. The stock has to move $1.50 for you just to break even. Every single presentation I start and say the exact same thing. This is the greatest time in history to trade as a retail trader. Okay? I will repeat that. This is the greatest time to trade as a retail trader. Why? There's liquidity. There's a lot of liquidity. And the markets are very, very tight, which means there's not much profit margin. Imagine going to Vegas, playing blackjack, and getting exactly 50 to 50 on your odds. If you trade Facebook, if you trade Apple, the markets are 1 penny wide, 26 bid at 27. Very easy to get in and out of positions. This is the best time ever for a market maker. If it's the best time ever, for a retail trader, that means the worst time ever for a market maker. I moved upstairs, started trading upstairs. I lost money, started losing money trading futures. Day trading the S&P 500 futures at a 5-minute bar was a little too fast, and I started losing money. Then I went back to my bread and butter for options, and I started losing a little bit at first, and there was a huge transition for me from on the floor to off the floor. But over time, I consistently started making money again. I do not make money every single day, week, or month, but I've made money 11 of the last 12 years trading. Okay, but I've lost money in a year. I lost money in 2009. I'm sure you guys have seen me on TV. I'm a regular contributor on CNBC, Bloomberg, Sky Australia, BNN Canada, WCIU, SIBO TV, and other outlets. CNBC Asia I've been on a lot more lately. I put my money where my mouth is. Everything that I teach, I 100% trade on my own capital. Okay, I have a very big, large account. The trade that I'm going to teach you today, I'm going to be trading on. I'm probably going to take around $100,000 of my own capital and trade on this philosophy because I believe in it so much. So when I come in and I talk to you guys on Closing Bell at CTU, everything that I teach you guys, I use my own capital and trade on because I believe on it. Okay, 90% of all traders lose money. That is a fact. The average time span of a day trader is a year and a half, and I was actually told about a couple months ago it's only about 3 months. Okay, my goal in the industry and Fossil's goal is to make you guys last longer, from taking you that trader that's not making money to hopefully making money. Think of it as we are job creators, right, Mr. Voorhees? We are trying to make more people make money. So let's talk about what we do here at KeeneOnTheMarket.com. We provide fresh trading ideas. Okay, I always say that our slogan is to provide fresh trading ideas while putting the probability in your favor and taking the emotion out of trading. Unfortunately, what you guys think and you believe, and you probably go through it every single day, trading should not be emotional. It is quite the rush to make $100 in a day, $200 a day. If you can make $250 a day, that's equivalent to about $60,000 a year. If you can make $500 a day, that's equivalent to about $111,000 a year. Okay? Trading should not be emotional. Okay? We are just trying to teach you guys here some fresh trading ideas. What works for us? Okay? What have we looked at the historical results on from all the ideas straight from my head, straight from the trading floor for over a decade, and provide it for you. So we're trying to teach traders how to trade. There are basically 3 kinds of trades. There are day trades, there are swing trades, and there are positions. Anything that's over a year is considered a position. It is not a trade. We'll talk about the difference between day trades and swing trades, and we'll tell you that how we are looking at swing trades in certain stocks, the high beta names that everybody likes to trade. As with all our trading plans, remember, we can teach you how to trade, but we can't click your mouse. So I can teach you guys, what I think works and what I think is a good, probable trade, but I cannot come there and click your mouse because I am not registered and I cannot pull the trigger actually for you. You got to do it for yourself. Putting the probability in your favor, okay? Everything that in life is just like trading is a mathematical risk versus reward setup. Let's say I wanted to go out tonight and drink a little bit too much. Instead of having 3 drinks, I have 13 drinks. Sounds like fun tonight, but what's my risk? My risk is I might oversleep the opening bell, and I might not have a chance to make money. Okay? Everything is a risk versus reward setup. I want to jump on the highway, drive 100 miles an hour. That sounds like a lot of fun to me. I like to go fast, but I could end up in jail because I'm driving probably 35 miles over the speed limit. Okay? So think about it as R and R. Okay? Some people like risk and reward. Some people like rest and relaxation. I do not like rest and relaxation. I like risk versus reward setup. How much am I willing to make on a trade? How much am I willing to risk on a trade? Okay. Someone came to me and said, Andrew, I'll give you $1 million right now. I want 95% of my trades to be winners. I would say that is easy. Give me $1 million. I could make 99% of your trades winners. I didn't say it'd be a profitable strategy. I could just sell a $1 call spread for 1 penny, and I know since the delta is only 1, I'm going to make money 95% of the time. The other 4% of the time, I'm going to blow my account out. But you guys got to realize it's a risk versus reward setup. I have traded thousands of stocks with mixed results. There are 8,700 stocks total that are publicly traded companies, not pink sheets, yellow sheets, blue sheets. Out of those 8,700 publicly traded stocks, there are 4,199 with options in them. Okay, I like to trade options. I like to trade stocks depending on my mood, depending on the day. If it's Thursday, I usually trade stock instead. It's early in the week. I like to trade those weekly options. Okay, we only teach and educate our traders what makes us money. Okay, everything that we've kind of looked at historical results, we're going to be trading with our own capital. Okay, I can't tell you that. I can't be. What I like to say is that we're on the side. It's like we're all together, right? Everything I'm teaching, I actually believe in. I'm actually trading myself. So let us be your guinea pig while risking our own capital, not yours. And I've been in the same position where everybody is today. You guys all took the first step of becoming a more profitable trader, which is coming to closing bells today. Okay? Learn something. If you like the presentation, take the offer. Take it and try it out. Okay? Education is key. Anything I do in life, if I want to learn something, if I want to become an expert, I take time to educate myself. I just got a little puppy here, and I needed a refreshment on how to train her. What did I do? Bought 6 DVDs on how to train my puppy. The exact same thing. I need a refreshment course on how to train her. Fitness is the same thing. They always say 90% of all fitness and looking good is nutrition, right? 90% of trading is psychology. If you cannot get over a day when you're losing money, you're never going to make it trading, okay? So much of trading is psychology. It's getting over that emotional hump that, oh my God, I'm down $2,000 in a day. No trader should ever trade money they can't afford to lose. Simple and easy. If you want to be the best in anything, you practice, and then you practice some more. I always say Michael Jordan was the best basketball player in the world for one reason, because he failed so many times. Jordan averaged 37 points a game, was Rookie of the Year, but he didn't win a championship for 7 years. Why was that? It's not because he wasn't a great scorer. He was a great scorer. He wasn't a good overall basketball player. Okay? He needed to get his teammates involved. And that's how trading is. You need to get all of your elements and be a 5-tool trader. Take the emotion out of trading. Paul Tudor Jones said it best. The key to trading is emotional discipline. If you guys cannot handle the emotion of losing or winning in a day, you're never going to make it, okay? Just like 90% of fitness is nutrition, 90% of trading isn't the actual trades you take. It's how to handle it when you're up money or you're down money. We teach systematic plans that take a trader's control in emotions. Anytime I put on a position, I can tell you right off the bat where a stop loss should be and where a target should be. That takes all the emotion out. Okay? You can have any option. You can use a 20% stop loss. You can use a 50% stop loss. One of the two. And then you're going to have targets based on your stop loss. Okay? Always figure out how much you're willing to risk on a trade. Take the emotion out of trading. It shouldn't be that emotional. It's okay. You can show up late. This will be recorded. So we have 2 different kinds of trades. We actually have 3 different kinds of trades. One's a day trade, one's a swing trade, and one is a position. Let's talk about what a day trade is. I call these WLD. What does WLD stands for? It stands for win, lose, or draw. Okay? These are positions I take during the day. We created a Thinkorswim proprietary indicator that takes into account day trading for Apple, Facebook, Baba, GoPro, Tesla, and Twitter. Those are my favorite 6 stocks to trade. We looked at the historical data, and these worked very, very well as a day trade. When I am day trading, 100%, the trade is off by the end of the day. I will never get stubborn and let the position stay overnight. And I call these WLD, win, lose, or draw. So in a day trade, it is designed just for the day. What do I like to trade them on? I like to trade the win, lose, or draw trades on a 5-minute bar using the Ichimoku Cloud. I can combine the 5 with a 15-minute bar as well to get a good signal. These are my favorite 6 stocks to trade. I will repeat them in alphabetical order: Apple, Baba, GoPro, Facebook, Tesla, Twitter. In reverse alphabetical order: Twitter, Tesla, Facebook, GoPro, Baba, and Apple. I've tried to day trade a lot of different stocks. I think day trading stocks is one of the hardest things to do. Other stocks I've tried to day trade that have been unsuccessful: CMGs, Chipotle, Priceline, Google, Netflix. I've LinkedIn. I've also tried to day trade stocks that gap higher, stocks with earnings, biotech stocks. It doesn't work very well for me. So I try to stick to what works. These are the 6 stocks that work best for me on a 5-minute bar, and I can combine that with a 15-minute bar. Remember, as we said, it is a day trade only. That means win, lose, or draw. The trade will be over by the end of the day. So this is a signal here on Apple on the 5-minute bar. I like to trade breaks of the cloud. I'm a breakout trader. When you're trading Ichimoku Kinkin Hoi, there's so many different ways to trade it. One way to trade it is a breakout. Okay, I'm a breakout trader. Another way to trade it is a mild pullback trader or modest pullback trader. Another way to trade it is an aggressive pullback trader. And the last way to trade is a counter trend trade, such as an example yesterday in Google, where Google made a new 52-week low, reversed off the lows, put in a final flag. It might be the low of the year here in Google at 490.62. As we see here in Apple on the 5-minute bar, Apple broke the cloud to the downside and set us up as a short signal here in Apple. So we see here in Apple, this candle right here, it broke the cloud to the downside. We actually don't have values here, but if I shorted Apple right here on the second bar as it broke the cloud to the downside, I would put my stop above the high of the day. I could be buying puts using the average true range. I could be selling call spreads. I could be buying put spreads, put butterflies. I could sell calls naked. I could sell stock naked. There's so many different ways of what I could do with this trade. But as you see here, just breaking the cloud to the downside, trend is your friend, playing with the trend here, and then I would short Apple right here with a stop above the high. Okay, simple, easy setup. Shorting Apple right here with a stop above the highs. And then Apple went straight down. WLD, win, lose, or draw, I would take this trade off 100% by the end of the day. Okay, I would be taking this trade off by the end of the day. This is a day trade only. This is not a swing trade. We will talk about swing trades and how to trade swing trades more profitably. This is Thinkorswim right here. This is Thinkorswim right here. Okay, so using the Ichimoku cloud. That was the Ichimoku cloud. I use the Ichimoku cloud every single day. I use 2 main time frames if I am day trading. I use the 5-minute bar and I look at the 15-minute bar for setups. I look at a couple different factors. I look at cloud thickness. I look at trend, and I look at other indicators like average true range. Trades like this are closed at the end of the day. Okay, so simple and easy. 6 stocks I trade. Day trade that have been working well this year. Apple, Amazon, Apple, Baba, GoPro, Facebook, Tesla, Twitter, using the 5-minute bar, using the 15-minute bar, look at the cloud thickness, look at the trend, and then I look at the average true range for these stocks. So this is one thing that I look at is to day trade. But WLD, win, lose, or draw, the trade will be over by the end of the day. So that is known as a day trade. What is a swing trade? A swing trade can have a large time frame. Swing trades have a holding period for 1 week to 6 months. Okay, so how do I determine how long I hold the day trade? I have 4 targets. So the first thing I always do is figure out my stop loss, and then I'll have 4 targets. Target 1, target 2, target 3, target 4. Since it is a swing trade, I can add to a losing position. As a beginner trader, adding to a losing position is never a good strategy. There are 4 stages of trading. Unfortunately, most people start at stage number 4. Stage number 4 is you lose a bunch of money. I'm sure most people have been there. We were talking about it earlier with a couple of my guys, and they said when you open an account, you should just forfeit your money away, because most people lose when they open an account. Stage number 3, when you're trading, you lose less money, but you still lose money. So you say to yourself, hey, I'm losing less money, but I'm still losing money. Stage number 2 in a trader is you make money, okay? Hopefully this is where most people are, but stage 3 and stage 2, you're making money, but you know you don't have enough money where you can go buy that car you want, or you can buy that vacation, or you can buy, you know, the wifey a nice necklace or a new ring to upgrade it on. And then stage number 1, which is where I am, is I make money over time. And I'm just like everybody here. I've been in every single stage. I've been in stage 4. It's a tough, painful stage to get out of. 2009, I could not do anything right. I could not trade for the life of me. Stage number 3, yeah, that's how I currently are in the last couple weeks, where I'm just hemorrhaging a little bit of money away every single day. Stage number 2, yeah, when you make a little bit of money, but you always want to make more money. And then stage number 1 is where I'm trying to get everybody to go. And this is why we've gone and then we've looked at the historical results of certain strategies that you guys want, okay? We look to see what you guys want. Everybody asks me, how can I swing trade Apple? When can I buy Apple? When can I buy Facebook? So I said, hey, give me a weekend. I'll look at the historical results of the Ichimoku cloud using a couple different strategies and philosophies, and I'll come back with results for you. And then we'll offer to you guys. Outside of 6 months, it is known as a position, okay? Don't think you're holding January 2016 as a trade, 2017. That is a position. You're just going to hold it as an investment. So we have day trades, and now we have swing trades defined. What options do I swing trade versus I day trade? Okay, that's a very, very good question. We had an open house today in front of about 250 people, and there's a trade in Dunkin' Donuts, and these did very, very well. Someone said, I bought March calls in Dunkin' Donuts. I already sold them for a loser. And I said to him, I'm like, March, you shouldn't be buying March calls for a day trade, okay? If you're day trading, you should be using the weekly options. Weekly options have the highest gamma, highest theta, highest risk, and highest reward. So when I'm looking at options, which ones do I want to day trade and which ones do I want to swing trade? For weekly options, if I am day trading, I want to look at options that expire in less than a week or the front month options. We all know the shorter to expiration, the higher gamma, higher theta, higher risk, higher reward. Okay? These can almost be considered known as binary bets. We saw a trade going across the tape today in GM, and I said to my subscribers, you know, these are calls being bought. Realize that these calls are either going to go to zero or they're going to double in value very, very quickly. I can actually show you this trade right here. So in GM today, we saw an institutional buyer of the GM. Look at this. This is a big order. Institutional buyer of 25,000 GM, January 35.5 calls for 25 cents. The stock was trading 35.02. On expiration, which is Friday, if the GM does not close above 35.75, this trade will be a loser. If the stock closes at 35.74 and actually goes up 1.7% between now and Friday, the trade will be a loser. Options do have a mark-to-market account. So if I buy these for 25 cents and they go up to 35 cents, then yes, they will go up in value and my P&L will go higher. But you can kind of think of it towards expiration. So if I'm day trading, weekly options work the best to day trade. Think of it as a binary event, okay? And realize that $500 of risk in the weekly options is way different than $500 of risk in the full month options, okay? It's like saying, hey, what has more risk if I bet $500 on, you know, the Bulls, or let's say who's the best NBA team? The Knicks are the best. Let's say on the Warriors. The Warriors are the best team in the league. Let's say that I had $500 on one game tonight on the Warriors versus I had $500 on the Warriors to win the NBA championship, right? So realize that, you know, the $500 at risk today is a lot more at risk than $500 6 months down the road. And you should be tweaking your strategy and your philosophy by realizing that, you know, risk of $500 in the weekly options is a lot more than risk in January 2016. You know, if I had equated, I would say $10,000 in January 2016 is worth about $500 of risk in the weekly options. These have very, very high gamma, so we will see large movements in delta. Okay, let's talk about front month options as a swing trade. Swing trade can last between 1 to 3 weeks if you're trading the front month options. You guys have all seen your options decay the week of expiration, and you say this is a scam. You know, the market makers are getting me. No, the market makers aren't getting you. It's called time decay. If you are long options, you are long two things. You're long implied volatility and you're short theta. If you're short theta, then every single day that goes by, you lose money on the time decay. Think of it as an insurance policy. You could say, hey, I had $1,200. I bought insurance for my car for the year. Well, if you really wanted to, you could break it down. Say, hey, I pay $100 a month. Hey, I pay $3 a day. Hey, I pay about 17 cents an hour, okay, or whatever the math is that breaks out to, okay? So realize that, you know, you are paying if you're long options. If you're long calls or if you're long puts, you are going to be long implied volatility. You're going to be short theta. So currently front month options are February and March. So I'm looking to swing trade February, March option. I'm looking at about 1 to 3 weeks. In the trading room, someone asked me my favorite trades. I said for a beginner, the best trade setup for a beginner is a strong-looking chart combined with unusual option activity. And today I took my 5th target in UPS. They were April 115 calls. The chart looked great. We saw a big buyer for April calls, so I put on a trade and I hit my 5th target. They can last all the way till 6 months down the road, though. Okay. If I'm looking at something that's March options as a swing trade can last between 1 to 6 weeks. So if I'm trading the front month options, 1 to 3 weeks. If I'm trading March options, which is 2 months out, 1 to 6 weeks. If I'm trading something that's April, June, July, I can have much, much more time because the trade can go wrong for a very long time, but I have a lot of time to recuperate that capital. So let's look at options that are 3 to 6 months down the road. Okay, these trades can last anywhere between 1 week and 5.5 months. I was long April 115 calls, as I said, in UPS. I paid $1.19 for them. I took 5 profit targets. I am out of the trade. Okay, I never get married to a position. What I do is I put on a risk versus reward setup. So something that is a swing trade, which is 3 to 6 months down the road, can last a week, can last 5.5 months. Positions may not be working out now, but there's a long time for that trade to work out. These are trades that I will add to if I'm currently losing. Okay? Never add to a losing position if you are a beginner. I am an expert trader. I've been trading for 12 years. I don't mind adding to losing positions. Okay? And it's something that's really, really helped me over time, and it's something that's really, really hurt me over time. Okay? But I do not mind adding to a losing position. If something is a June position, a July position, okay? Just because I'm down money in a week and the position's July, I have 6 months for that trade to work out. I have a prime example in CTRL. They do some, I don't even know what they do, they do some fans in the home space, and they're always a possible takeover candidate. July 20 calls have been bought, and I've been adding to that position because it's 7 months away. Realize that July risk is way different than the front month risk. I try not to add too much positions in the front month or in the weekly options, but I don't mind adding if it is a swing trade. Why take swing trades, okay? It's a very, very valid question. People say, hey, I wish I could day trade, but I can't day trade, okay? The Dodd-Frank Act, and there's been a lot of causes, of why we cannot day trade, okay? Not every single trader can day trade. It's called the pattern day trade rule. It requires you to have more than $25,000 in your account. So if you have less than $25,000 in your account, you cannot day trade. Unfortunately, it sucks. It's not a good rule. I don't like the rule personally, but it is what it is. Some people have $5 grand, 10 grand, and they want to trade. Well, you can only make a certain amount of trades in a week. More or less, they don't want you to blow out your trading account. Okay. Also, traders are not at their computers all day long. I'm at my computer all day long, but not everybody's at their computer all day long. They just want to put on the best probable setups. You're going to take a trade that's a swing trade. You're going to have that position on a little bit longer. You're going to have probably, a wider target, and you're going to have more profitable strategies. The most profitable strategies only happen once a month, once every 3 months, once every 6 months. Day trading, there's a lot of trades, but there's a lot of losses. If you want to say, what is that one best setup, okay? You said to me, Andrew, what's that one best setup in Apple? I don't mind waiting once a month to get a signal in Apple, but I want the best possible setup, okay? That's what we're going to teach you today. We're going to teach you the philosophy of how to get the best signals, and then we're going to talk about the Think or Swim proprietary indicator we wrote and the trade and email service that we are offering, okay? So not everybody's in front of their computer all day. People actually do work. I trade for a living, but other people do work. Doctors, sales, you work. You can't be at your computer. There's firewalls where you can't be at your computer trading during the day. And not every trader wants to be active, okay? Someone wants to say, hey, I want to get in Apple. I like Apple. I think it's going to go higher. Where is a good signal, okay? Can you teach me where a good signal in Apple is, okay? Can you teach me a good signal in Facebook? So today we're going to teach you where to get the best signals and then how to apply them. And then we have a 3-hour workshop in about, I think it's 2 months, talking about this as well. Yeah, we will send out the recording. We will send out the recording. So we're going to teach you this certain strategy, and we're going to look at it in Netflix. Okay, it's all Ichimoku Cloud based. Everything that we are testing historical data on is all based on the Ichimoku Cloud. The Ichimoku Cloud is now the trending topic in trading because every single Japanese dealer desk trades using the Ichimoku Cloud. It hasn't picked up that much in the United States just yet, but people are starting to pick it up. Every single brokerage now had it. The Nigerian brothers read my book on the Ichimoku Cloud. Trade Monster wrote the Ichimoku Cloud into it. I do a presentation once a month teaching their customers the Ichimoku Cloud. Interactive Brokers just picked up the Ichimoku Cloud. So all of our trading that we're going to teach you guys is based on the Ichimoku Cloud, otherwise pronounced as Ichimoku Kinkin Hoi. So what we do, it's a simple, easy strategy. We go from the monthly chart to the weekly chart and then to the daily chart. Okay? Monthly chart, weekly chart, and then the daily chart. So let's look at an example here in Netflix. So what we're going to do is we're going to start at the monthly chart. We're going to say simple and easy. Above the cloud, in the cloud, or below the cloud. Bullish, bearish, or neutral. Then we'll look at the weekly chart. And we'll say at the weekly chart, is it bullish, bearish, or neutral? Then, if they're both bullish, we'll look for breakouts of the cloud. We'll look for a breakout of the cloud either to the upside or to the downside. So let's start our example here with Netflix. So this is using Thinkorswim. This is Netflix on the Ichimoku Cloud on the monthly chart. As we see here on the monthly chart, Netflix is always above the Ichimoku Cloud. Okay? So the longest time frame, the monthly chart, it is bullish. Okay? So I'm not going to be looking for any bearish setups whatsoever here in Netflix. I'm only looking at bullish setups here in Netflix. Right after I look at the monthly chart, we're going to break it down to the weekly chart. So let's go here to the weekly chart. So we see here on the weekly chart, the stock is making higher highs, higher lows, and it broke the Ichimoku Cloud on February 4th, 2013 at 181.60. So with the stock on the monthly chart, it is above the cloud. When the weekly chart is above the cloud, we're only looking for long signals. We are not going to take any long signals while Netflix is in the Ichimoku Cloud, here, or in here, or below the cloud. So number one, monthly has to be above the cloud. Number two, the weekly has to go above the cloud. So monthly above the cloud, weekly above the cloud. We will not take anything when it is in the cloud. Step number three. So this is a three-step trade. Monthly, weekly, daily. Monthly, weekly, daily. We looked at Netflix. Monthly is always bullish. We looked at the weekly. The weekly is bullish for the most part. We would stay out of trades anywhere in here. Now we look at the daily chart. And we're only looking for longs. We are not looking for any shorts. Okay? So, as we look at it here, we're going to look at the daily chart. And we're going to look for breaks of the Ichimoku Cloud. Okay? So we started at monthly. We looked for bullish setups. We looked at weekly. We looked for the bullish setups. Then we look for the daily chart. And we want to see breaks of the Ichimoku Cloud. Those provide the best signals. Since the weekly is only bullish, we're not looking for any short positions. Okay? We are not looking for any short positions at all. We're just looking for those long setups. And to be general, as generalization, that's probably pretty good because most people just like long setups anyways, right? So we see here, we got signals in Netflix on. So this is over the last 3 years of historical data. We got a signal on April 23rd, July 1st, July 8th, and then January 23rd. Those were all profitable trades, okay? And we have a mathematical way where we have stop losses in place, and this is what we're going to teach you at the workshop. We're going to create a trading plan for you so you guys can take these swing trade signals. As remember here, we're not taking any of these trades in here because we don't take any short setups when the monthly and weekly is above the cloud. We're only looking for long setups. So we don't look at any of these short setups here. We don't look at any of the short setups in here either. We're only looking for long signals. We're also not looking for any longs in here. It's under the cloud. So the monthly has to be above, the weekly has to be above, and the daily has to be breaking the cloud. So let's look at how our results have been. Let's look at the performance of this trade. In the last 3 years, okay, using this 3-step process in NFLX, using a 3-step process, a monthly chart, weekly chart, and daily chart, we got 6 signals, 5 winners, and 1 partial winner. Okay, so this is an 87% win rate. And you say to yourself, that's not enough trades for me. I want to trade every single day. Well, maybe this isn't for you. But if you're looking for the best probable, best math setups, and I always tell my subscribers during the day, every single day, if I'm not that active and I'm not trading a lot, I would rather take 2 trades and make money on both than take 10 trades and have 5 be winners, 5 be losers. Okay? So in the last 3 years, we basically got a signal every 6 months. Okay? This is why we did the study for 4 different stocks. So we should produce a signal about every 6 weeks. We should produce a signal every 6 weeks, and we've looked at the history of how these results work, and we're yielding anywhere between 65 to 80% winners. Okay? Would you rather get a signal once every 4 to 6 weeks that results in a 75% win rate, or would you rather get a signal every day that's 50-50? Okay? So in the last 3 years here in NFLX, we had 6 signals using this 3-step process. Step 1, monthly chart. Step 2, weekly chart. And then step 3, daily chart. And the one loser was actually a partial winner, which means it hit target number 1. This is just one example of what we will teach you, how you guys can swing trade options or stock. So if you're a futures or forex trader, this is not for you. This is for stock, swing traders, and option traders. So we have this package that we're offering today. You get a lot with this package, okay? This is how to trade the best names better. We did this in front of Trade Monster audience. So you guys are the first people, second people to see it. The Trade Monster audience were the first people. We sold out within about 15 minutes, and we only have 45 spots available. And what we're going to do is we're going to teach you how to trade Apple, Amazon, Facebook, and Google better. Okay? These are the names everybody wants to trade. I get it, guys. It's not really much fun to say, hey, I made money in IL. Hey, I made money in PPL. What's more fun to say is, I made money in Apple. That's cool to say. You want to tell all your friends you made money in Apple. You made money in Google. You made money in Facebook. So we are offering this today. We're going to have 45 spots available. When we presented this at Trade Monster, we sold out in 20 minutes. It's a $1,397 value, and we're offering it for 85% off. But let me tell you what you're going to get for this. Number 1, you're going to get a 3-hour workshop. We're going to teach you the trading plan, the history of this trade, and why they work. Okay? This will be in about 5 weeks here. Okay? We're going to give you a 3-hour workshop of the trading plan, the history, and why they work. That's a $199 value right there. We're going to give you the Thinkorswim proprietary indicator with instruction. So we did all the work, and we wrote all the code for it. As you see here, if I go into the daily chart, we're starting to write proprietary indicators for Thinkorswim, and it's called Ichimoku Cloud Breakout with Targets. Okay, so everything that we've done, it makes it in the Thinkorswim indicator, so you guys can put that straight on your charting. We usually sell that for $199. That's going on the website tomorrow, probably for $199. And what we're also offering is 1 year of text and email alerts with stops, targets for options and stock. And that's a $999 value. So it's a total value of $1,397. And we're offering it today for $197. We only have 45 spots available. I'm pretty sure we're going to sell out of this price point, and we're going to sell out quickly because we sold out at Trade Monster. You guys can sign up at www.keenonthemarket.com/CTU for Cyber Trading University, or you can call us at 312-261-5581 So what you'll get is the 3-hour workshop with the trading plan, the history of the trades, and why they work. That's $199 value. We're going to give you the Thinkorswim proprietary indicator. You cannot get this anywhere else. Okay? You cannot buy this anywhere else. And this is designed for Apple, Amazon, Facebook, and Google. So once you plug it in your charts and you go to the daily chart, and we can go here as we go back a little bit. Let me go to 6 months. So on the daily chart, you'll get these signals that will pop up. I have to back it out a little bit more. Should be working. All right, go back in here. Well, it's not bringing up for me. But you'll get the Thinkorswim indicator, and then you'll also get 1 year of alerts via text and email. Okay, so you get 1 year of alerts with text and email. So it's a $1,397 value, and we're offering it for $197. We have 45 spots, and we will sell out. And I will leave it open to questions right now. So fire any questions you guys have away. Or if you want to look at any charts, I can look at charts for about 10 minutes. You do not need to know how to trade options? No. You do not need to know how to trade options? No. We'll send you the trade for stock and options. Okay, so you'll get a stock and an option trade. Are the spreads wider for weekly options than monthlies? No, the options for weeklies are tighter. James said he just got in. Great, James. Jack just said it's such a great deal. I can't believe he got in for a whole year for $197. Okay, you get a whole year of the trade alerts for $197. What is the minimum to set up an account with Thinkorswim? You'd probably have to call Thinkorswim. It's probably $5,000 to trade options. I don't know. I'm not a registered investment advisor. I'd call Thinkorswim. Okay, guys, we're down about 38 spots here. Barry just said he got in. Great, Barry. A whole year of trade alerts via text, Twitter, and text and email. You'll get those right when the trade is. Is this for a beginner, and how much do I need to trade with? Yeah, this is for a beginner. This is going to be the best probable trades in Apple, Facebook, at Google throughout the course of the year. So if you're looking for the creme de la creme setups, as they say, the Glengarry Glen Ross leads, how many alerts? We can't predict how many are going to have this year, but on average, I would say there's going to be about 8 to 12 signals. 8 to 12 signals. Can't promise anything, but probably 8 to 12 signals. The workshop's going to be in the end of February. It will be for longs and shorts, yes. Long positions and short positions, but we got to line up that monthly chart, that weekly chart, and that daily chart. So we got to line up that monthly, weekly, and daily. You cannot get the indicator unless you purchase it through us. Okay. When you pay for this and you go to keenonthemarket.com/CTU or call us, it will show you the link of how to get the indicator on your setup. Okay. You cannot get this indicator anywhere else. You cannot get this indicator anywhere else. Scott says he's in, can't wait to use it. Thomas said he's always been looking for the best probable setups. Well, this is what it's going to have. We're going to be writing the indicator for TradeStation. Yes, we'll write the indicator for TradeStation. If you guys want to look at any charts right now, we have about 10 minutes where you can look at charts as well. What is the average win rate? The trades have been yielding about 65 to 85% win rate. So if you guys are looking for high probable setups to swing trade the best names in the business, you're not going to get any better than this. AMBA, I think the stock goes higher. It's pulling back here. I think AMBA goes higher. We would have had a buy signal here at 38. We would have had a buy signal down here at 31. Ninja Trader, we will not do it on Ninja Trader. Morgan is bullish to neutral. I mean, neutral here in Morgan. Dunkin' Donuts, great unusual option activity in Dunkin' Donuts today. A lot of my subscribers made a lot of money today in Dunkin' on the March 47.5 calls in Dunkin' Donuts. Well, you have to line up the monthly and the weekly. Starts with the monthly, then the weekly. Then you go to the daily. Netflix, there's no setups here, okay? The monthly's still bullish. The weekly's bearish. I think Netflix will take out the lows. I wouldn't be long Netflix here. our signals would not provide it here. Let me see one quick why it's not. Should be pulling up here. Day trading, that's day trading. Swing trade, maybe this is it. So we put in the indicator, it's called the swing trade here. So if we go to Facebook, there, boom, there's our swing trade. So this is how it's going to look on Thinkorswim, guys. And it gives you your stop and all your targets. How cool is that? Okay. So we got a buy signal here in Facebook. This is the last buy signal we got. We got a buy signal here in October. A buy signal at 75.95. So a trader could have bought in a buy signal at 75.95, and they would have hit one target. You'd still be in the trade. You would hit target, almost hit target 2, and you'd still be in Facebook. Okay. If you look at Apple, and this makes it so easy for your trading. Okay. It just gives you exactly the buy signal and exactly the stop loss and targets. So the last buy signal we had in Apple was in October at 100.7. The stop is automatically mathematically calculated for you. So the stop was 94.68, which was about 40 cents under the low, and you hit how many targets in Apple? You hit all 4 targets in Apple. Let's look at another Apple signal here. We had an Apple buy signal here. That one we actually got stopped. That was the only one we got stopped for the last 3 years. Buy signal here in Apple too. These were sell signals. We wouldn't have taken either of those. Let me go to Amazon, see how Amazon looks. We wouldn't take these sell signals because it's above the cloud. We got a buy signal back here. We got 2 buy signals back to back, guys. Look at these buy signals. Great, great trade. Swing trading Amazon here. We had a buy signal at 299.71, stop at 280. We'll send these trades via text and email for options and stock. So we got 2 buy signals here, and all the targets are here. You cannot get this indicator on Thinkorswim anywhere else. A couple more questions here. Can this indicator be used for any other stocks? Yes. We've just looked at the historical data for these 4 stocks. Okay? We've looked at the historical data for these 4 stocks. Bill just said he got in. Great, Bill. Excited to get you on board. CMG. Yes, you can take bearish trades as well, but you got to make sure they all line up. CMG here. CMG, I think, goes higher here. A lot of bullish signals here in CMG. So let me go over what you guys all get again. So this is how to trade the best names better. This is designed for Apple, Amazon, Facebook, and Google. It's a $1,400 value. Okay, we have 45 spots left. I see my email blowing up. We're probably down about 31 spots left. Okay, we're going to give you a 3-hour workshop with a trading plan, history of trades, and why they work. That's a $199 value. We're going to give you the Thinkorswim proprietary indicator, how to swing trade these 4 names that you can't get anywhere else. It tells you the exact entry, the stop loss, and the targets. Also, we're going to give you 1 year of text and email alerts with stops and targets for both options and stock. It's a $999 value for that. So it's a $1,400 value total, and we're offering it today for $197. We did sell out at the Trade Monster. I'm pretty sure we're going to sell out here in the next 10 minutes. If you guys have any questions, I'm going to give it open for I'll do 3 minutes of questions, and we'll call it a night. We will do it for TradeStation. It will be available probably within the next 2 weeks. But you get all the trades via text and Twitter anyways. MasterCard is bullish to neutral here in MasterCard. QQQ. Let's look at that one. So you get a whole year of swing trades, Apple, Amazon, Facebook, and Google for that price of $197. Works out to about works out to about $17 a month, which is less than $1 a day. We don't have an example of what the text looks like, but they're pretty easy. We send 100,000 text messages a month. SPY, neutral to bullish here in SPY, just like the S&P 500 futures. Bullish to neutral here. Alcoa, sold off today. Bullish to neutral here in Alcoa. I think James had an earning trades in Alcoa. Alcoa bullish to neutral. All right, thanks, guys. Make sure you guys sign up. We have some spots available. KeenOnTheMarket.com/CTU or call us at 312-261-5581. A year of trade alerts via text and email, the Thinkorswim indicator, and the trading plan for $197. That is it. And I will see you guys in the trading room tomorrow. Thanks, guys.